We have reached the point of no return. We have received the signal. The recent confirmation regarding price floors, tied directly to the strategic shifts signaled by Vance and the emerging economic nationalism, has changed the game. The shorts aren't just nervous. They are trapped. They are in a cage of their own making, and the walls are closing in. Welcome back. Today, we aren't just talking about charts. We are talking about destiny. We are talking about the greatest wealth transfer in human history and how $1,000 silver isn't a moonshot anymore. It's the escape hatch. If you believe that truth eventually wins, hit that like button right now. Let's show the algorithm that the silver community is awake. If you believe that truth eventually wins, hit that like button right now. Let's show the algorithm that the silver community is awake. To understand why $1,000 is coming, you have to understand the lie we've been living in. For 40 years, the price of silver hasn't been determined by supply and demand. It has been determined by a casino, a paper market, a place where bankers trade promissory notes for metal that doesn't exist, in quantities that have never been mined. Imagine you have a house, a real physical house. Now imagine I sell 1,000 pieces of paper, each claiming to own your house. The price of your house on the market crashes because suddenly it looks like there are 1,000 houses for sale, but there is still only one house. That is the silver market. For decades, big institutional shorts have used this paper leverage to suppress the price. Why? Because gold and silver are the report card of the economy. When they go up, it means the dollar is failing. It means confidence is crumbling. Keeping silver low is how they keep the illusion of a strong currency alive, but something has snapped. The narrative has shifted at the highest levels. When we look at the recent rhetoric, specifically the economic doctrine being pushed by figures like J.D. Vance and the new wave of industrial populism, we see a distinct pivot. The focus is no longer on financial engineering. The focus is on reshoring. It's on manufacturing. It's on strategic independence. Here's the key that unlocks the $1,000 door. You cannot rebuild American industry with paper contracts. You cannot build a missile, a solar panel, an EV battery, or a microchip with a futures contract. You need the physical metal. This is where the price floor comes in. The confirmation we are seeing is a realization that low commodity prices are actually a national security threat. If silver is too cheap, mines shut down. If mines shut down, the U.S. loses access to the strategic material it needs to compete with China. Therefore, the government, the very entity that used to benefit from low prices, now has a vested interest in higher prices. They need to incentivize production. They need a floor. And when you put a floor under a market that is heavily shorted, you create a death trap for the bears. Think about the psychology of a short seller. They bet money that the price will go down. They borrow an asset, sell it, and hope to buy it back cheaper. It works great when the government wants a strong dollar and a service economy. But what happens when the government wants a manufacturing boom? The shorts are looking at the new political landscape, and they are sweating. They are realizing that the Vance doctrine, this push for hard industry, means the days of suppressing commodities are over. If the price cannot go down because of strategic demand, it can only go up. And when it starts to go up, those shorts have to cover. They have to buy back the silver they sold but never owned. But here's the catch. Here is the beautiful, terrifying catch. There is no silver to buy. While the paper price was being manipulated, the physical inventory was being drained. The vaults in London, draining, the COMEX, bleeding ounces every single day. India is importing silver like they know the world is ending. China is hoarding every ounce they dig out of the ground. The shorts are trapped in a burning room, and the exit door is the size of a keyhole. I want you to really feel the weight of this moment. This isn't just about making money. This is about vindication. How many of you have held on to your stack while tech stocks rallied? How many of you bought an ounce a week, enduring the ridicule of friends who bought crypto scams or NFTs? If you've been stacking for more than a year, comment "I'm still here" down below. Let's see who the real ones are. The trap that has been set for the shorts is mechanical. It's not a theory, it's math. Let's talk about the industrial squeeze, because this is the fuel for the fire. Silver is the most conductive metal on Earth. It is the most reflective. It is antibacterial. It is indispensable. We are entering the age of electrification. You cannot have a green energy transition without silver. You cannot have an AI revolution without silver. Every server farm, every connection, every advanced switch requires it. The estimates are staggering. The solar industry alone is on track to consume over 20% of the entire annual mining supply, and that's just one industry. Now consider the new price floor dynamic. If the US government and its allies decide that they must secure silver reserves for national defense and industry, they become the ultimate buyer. They essentially put a put option on the market. They say the price will not go below the cost of production. Currently, the all-in sustaining cost to mine an ounce of silver is rising rapidly. Fuel costs, labor costs, lower ore grades. It's getting harder to find and harder to dig up. So you have rising production costs creating a natural floor, you have strategic government interests creating a political floor, and you have explosive industrial demand. Now look at the shorts. They are holding billions of dollars in short positions. They are betting against gravity. When the price breaks $35, then $50, the margin calls will begin. A margin call is a demand for cash. When a short position goes against you, the broker calls and says, put up more money or we close you out. To close out a short, you have to buy. Imagine a crowded theater. The shorts are the audience. Suddenly someone yells, fire! That fire is the breaking of the $50 level. Everyone rushes for the exit. But to get out, they have to buy silver. But who is selling? Are you selling? I'm certainly not selling. The miners, they are already sold out or holding back supply for higher prices. The strategic reserves, they are buying, not selling. This creates a feedback loop. The shorts buy to cover, which drives the price up. The higher price triggers more margin calls, which forces more buying. It goes vertical. This is what we call a limit up event. This is how you get to $1,000. It doesn't happen over 10 years. It happens overnight. It happens in a violent repricing event where the paper market breaks and the physical price detaches. We have seen glimpses of this. Remember nickel on the LME, it exploded in hours. They had to shut the market down and cancel trades to save the banks. But silver is too big, it's too global. They can't cancel everything. And with the political cover of rebuilding America, the price rise will be framed as a good thing. It will be framed as a return to real value. The Vance confirmation acts as a signal to the smart money. The insiders, they know how to read the political tea leaves. They see that the era of financialization is dying and the era of tangible assets is born. They are quietly positioning themselves long. They are leaving the shorts, the dumb money, holding the bag. This brings us to the emotional core of this story. Why does this matter to you? It matters because for too long, the average person has been stolen from. Inflation is theft. When they print trillions of dollars, they are stealing the value of your labor. You work harder, but you can buy less. Your savings account is a melting ice cube. Silver is your shield. It is the only thing that has preserved purchasing power over thousands of years. But more than a shield, it is now a sword. For the first time in our lives, the little guy is on the right side of the trade. The banks are on the wrong side. The establishment is on the wrong side. They are short. We are long. When silver hits $1,000, it won't just mean you are rich. It will mean you were free. It will mean you opted out of a corrupt system and built your own ark before the flood. But we have to be careful. The path to $1,000 won't be a straight line. The trapped animal fights the hardest, right before it dies. As the realization sets in that the price floors are real, the shorts will try one last desperate smash. They will dump paper contracts in the middle of the night. They will try to trigger your stop losses. They will use the media to tell you that silver is a bubble, that it's worthless, that you should sell and buy treasury bonds. Do not listen. This is the psychological warfare stage. They need your silver. They need you to panic so they can cover their positions. Remember the Vance signal. Remember the strategic necessity. The government cannot allow the mining sector to collapse. They need the metal. The wind is at our backs for the first time in history. Let's look at the ratio. The gold to silver ratio, historically it sits around 15 to 1. Today, it is hovering near 80 or 90 to 1. Silver is historically absurdly cheap relative to gold. If gold goes to $10,000, which many experts predict is necessary to backstop the debt, and the ratio returns to its historical average of 15 to 1, do the math. $10,000 divided by 15. That is $666 silver. But if the industrial shortage hits, if the panic buying starts, if the shorts are squeezed into oblivion, the ratio could overshoot. It could go to 10 to 1. It could go to 1 to 1 in a total currency collapse scenario. $1,000 is not a dream. It is a conservative estimate in a hyperinflationary or hyperscarcity environment. We are looking at a perfect storm. 1, the political shift, the rejection of globalization, and the embrace of national industrial strength. This requires high commodity prices to stimulate production. 2, the monetary failure. The debt is unpayable. The only way out is to inflate it away. Hard assets rise in that environment. 3, the physical shortage. Demand is outstripping supply, and the grades of ore are falling. 4. The short trap. Decades of suppression have built a coiled spring of energy that is about to release. So, what does the world look like at $1,000 silver? It looks like a world where wealth has transferred from the paper pushers to the producers, from the speculators to the savers, from the lies to the truth. It means that the stack of coins sitting in your safe, the heavy bars you hold in your hand, are not just metal. They are generational wealth. They are a college education for your grandkids. They are a house paid for in cash. They are the ability to say no to a job you hate. But you have to hold. The hardest part of this journey isn't buying. It's holding when the price swings. It's holding when it goes from $100 to $80 and the news screams, crash. It's holding when it goes to $500 and you feel like you have enough. You have to realize what you own. You don't own a stock. You own an element on the periodic table. You own a piece of the earth that is essential for the future of civilization. The shorts are trapped because they treated silver like a number on a screen. They forgot it was real. They forgot that you can't print it. And now the floor is rising beneath their feet. The ceiling is coming down on their heads, and the exit is blocked by millions of apes, stackers, and investors who refuse to sell. We are the whale now. The collective buying power of the awake public is draining the physical supply faster than they can replenish it. I want you to visualize your stack right now. Close your eyes. Picture the weight of it. That is your anchor in the storm. There is a story about a man who sold his farm to go search for diamonds. He wandered the world, broke and destitute, never finding them. Meanwhile, the man who bought his farm found a strange rock in the stream. It was a diamond. The farm was sitting on one of the largest diamond mines in history. We are sitting on the farm. The silver market is the mine. The world is wandering around looking for value in crypto coins named after dogs, or in tech stocks with zero earnings, or in government bonds that pay less than inflation. They are searching for diamonds while we are sitting on the silver. The confirmation of price floors is the geologist's report telling us exactly what we have. It is the validation we have been waiting for. Shorts are trapped. The narrative has flipped. The industrial machine is hungry. We are about to witness the separation of price and value. The price is what you pay. Value is what you get. For years, the price was low, but the value was high. Soon the price will catch up to the value, and when it does, it will move with the violence of a breaking dam. Don't let them shake you out. Don't let the volatility scare you. Volatility is the price of admission for the returns we are about to see. This is your time. This is our time. If this message resonates with you, if you feel that fire in your gut that says, I was right, then you need to do 2 things. First, share this video. Send it to one person who needs to wake up. We need to grow this army. The more of us who hold physical silver, the tighter the trap becomes for the shorts. Second, look at your portfolio. Ask yourself, do I own what they can print, or do I own what they need? The floor is in. The trap is set. The countdown has begun. $1,000 silver is coming. The only question is, will you be watching it happen, or will you be part of it? The window to accumulate is closing. When the repricing happens, the physical metal will vanish from the dealers. You won't be able to buy it at any price. Unobtainium. Stay strong, stay stacked, and watch the shorts burn. Now, if you're wondering exactly which types of silver to buy to maximize your leverage when this squeeze hits, because not all silver is created equal, you need to watch this video right here. I break down the premiums, the tax advantages, and the specific coins that skyrocket first. Click it, and I'll see you there.